Ashraf Laidi is the chief market strategist at CMC Markets in London. We want to ask him how you position yourself ahead of all this news. Risk is coming back into the markets. A lot of things could affect trading this week. What do you want to do, Ashraf?
Well, actually, we have to be careful before we say that risk is really coming back in the market. If you notice, all the past 3 Mondays or 4 Mondays, risk comes back. Part of the reason because there's no data. Most of the action happens in the week is on Thursday and then on Friday, and risk aversion comes in, and the currencies that usually go up when there is risk aversion, they push higher, like the dollar and the yen, and on Mondays there is a retracement. So the real thing really starts in the middle of the week when the Fed chairman basically is going to try to again to put more ink on the details of how to do the exit strategy. And I think he's going to shed more light on the possibility of paying interest on bank reserves. If you're a currency trader, you're really still really constructive bullish in the US dollar and to a lesser extent the yen against the euro, against the pound, but not so much against the commodity currencies. While with the equity side of the story, there is the retracement, but people are not really holding their breath because, again, we're talking about the chairman of the Fed, even though he's going to tell us interest rates are going to be low for a long period of time, he is readying to start to taking out some of that liquidity.
Yeah, we saw the dollar move on the comments and the discount rate move last week, but is there really much movement scheduled for the dollar this week, given that Bernanke is going to try to talk it down?
Okay, well, as you know, the dollar is the price of a nation's currency against another one. So let's talk about the other side of the equation. So when you look at the euro dollar, when you look at the pound, you got to look what's going on in the UK. You got to look at what's going on in the euro. There is that much anticipated bond issue by Greece. And what's going on here with the story with Greece is that I know that this has been talked about so many times on your channel, but the story is the European Central Bank is not expected to withdraw any of that liquidity. It's actually expected to provide more liquidity in case the bond issue does not go well for Greece, in case there is some sort of event risk, in case the Portuguese story comes back up. So it's the contrast. You got the ECB having no choice but to keep liquidity in, and the Fed is talking about starting to take a little bit out. And that gives the currency traders no choice but to continue to be bearish on the euro. And any rebounds in the euro are expected to be limited at 138.50. Same story with the British pound. You've got the fiscal woes like we saw last week with the public deficit for the month of January was really the first deficit in a long time, and that was negative for the pound.
All right, Ashraf Laidi from CMC Markets, thank you very much for being our guest this morning.